Yes. So here we are with a chapter, chargeable gains for companies. Okay. So when you study any chapters with regards to corporation tax, remember that all of them are equally important when doing, especially a CR question. Now, aspects from this chapter can come as MCQs or they can feature in CR questions. Now, in CR questions, if they are featuring CR questions, keep one thing in mind. When does a company have chargeable gains? When it sells assets, or when it sells shares, or when it sells its properties. When they sell some asset of capital wealth, they come across a chargeable gain. So this is the format when it comes to companies. Okay, have a look at the format. It's very similar to individuals. Proceeds minus cost. So basically we do proceeds minus cost, but here there's an unindexed gain, and then you can see the indexation allowance, and then that gives you the index gain. So remember something, your your unindexed gain minus your IA gives you, index gain. So index gain, how do you calculate indexation allowance? That is cost into IF. Yes, it is cost into IF. So you calculate as cost into IF. So whatever cost you have, be it your acquisition cost or incidental cost of acquisition or enhancement expenditure, whatever cost you have, remember to inflate it. And with regards to that, also remember your index gain is also known as your chargeable gain. When they ask you for chargeable gain, they're asking you for index gain. Then also, how do you calculate your indexation allowance? Indexation allowance is cost into IF. Now, how do you, like in the question, they'll give you the IF. How do you choose IF? So whatever cost you're having, that date till the proceeds date, you have to take a look. But the proceeds, now we cannot inflate something beyond December 2017. So it should be from the cost date till the proceeds date or December 2017, if whichever is earlier. Okay, so that's how you calculate your IA. And always remember something. When it comes to capital losses for individuals and companies, what is the treatment? So let's keep individuals aside. Let's talk about companies. So when a company has a loss, we cannot again take an IA. Like let's say proceeds minus cost gives you a negative number. So that is your loss. You don't have to do IA and all over there. So your IA cannot do two things. It cannot make a profit into a loss, or it cannot make a loss into a bigger loss. What is the whole point of an allowance? To save tax. Always remember that. All right. Now, when it comes to shares and securities, same for individuals and companies, but only the matching rules are different. In the case of companies, what are the matching rules? Same day, previous 9 days, and share pool. In the case of individuals, it is same day, following 30 days, and share pool. Now, remember something. You don't have to calculate IA if it is a same day or previous 9-day purchase. Only in the case of share pool, you have to calculate IA. You have to be very good with the share pool working. Let me show you the share pool working. This is what the share pool working looks like. So always follow the logical way of doing things. Write the numbers column, cost and indexed cost goes there. And think of a burger. Okay, that is after each purchase. If the next event is a purchase, before that, don't forget to put the IA over there, and then a purchase comes. So make a perfect burger like that. Okay, and each time you have to inflate what you should be inflating. What is it that, like for example, after this particular purchase, total it up, and this amount into IF will give the IA. So after each event, keep doing IA. Make burger. Okay, think about it that way, because food makes it easier to think, right? Then another thing to think about is, what amount you take in the main format. Always remember this disposal amount. So basically, you get both of these amounts. Working two minus working one gives you the indexation allowance. All right. Be very good with the company share pool working. Then another thing to think about is with regards to bonus and rights issue. Bonus is an operative event. Rights issue is not an operative event, which means when it comes to bonus, after a purchase, the next is a bonus. Should we do IA? No need to do IA. But rights issue, yes, we have to calculate IA. Now, takeovers and reorganizations, same like individuals. Now, in the case of, there is share for share consideration, there is mixed consideration. So share for share consideration, what happens? No chargeable gain arises at that particular point of time, but in mixed consideration, yes, it does arise. Now, what happens is sometimes after share for share consideration, the company sells off the shares. The company sells off the shares. So that time, remember these three workings. Remember to do this. These three are the best thing that you can do. Follow these steps. So always remember the concept. Cost of old shares is equal to cost of new shares. Okay, cost of new shares. Cost of old shares is equal to cost of new shares. Okay, so whatever you're selling, or sorry, whatever you're transferring to the other company. So think about this. WhatsApp, Facebook, think about it that way. The cost of WhatsApp shares is equal to cost of Facebook shares. That is, whatever you're giving is equal to what you're getting. The cost is exactly the same thing. All right. So the first thing, like, once a share for share consideration happens and then there is a sale, how do you calculate the chargeable gain? Follow these three steps. Follow these three steps. What are the three steps? Calculate cost, index cost, up to the takeover. So remember, takeover is not an operative event. Okay. Takeover is not an operative event. After a purchase, if the next is a takeover, don't calculate IA over there. Purchase, and then after that, no IA. You just have to do, just leave it as it is. If after purchase, another purchase, then you have to calculate IA. That is the first thing. So cost, index cost up to takeover. Next step is of whatever you're selling, calculate the cost, index cost alone. That is, do you remember using market value allocation? You will do it this way. Cost, market value, number of shares. You remember that, right? Cost. So cost is already given to you. Index cost also will be the index cost also. You'll write it down over there. Index cost. Yes, you remember this, right? So after that, write the cost, the old cost and the old index cost. That is what you got from working one. Write it down in the totals column. And using the market value, we'll know how to allocate it. That is the second step. Third step is disposal. That is from takeover to disposal. If you want more practice on this, I'll tell you one question that you can focus on with regards to this question practice. You can look at this particular question. Jojoba Limited. Just do this question. You'll be perfect with your takeover. All right, takeover. Now, in the case of cash shares or cash also, they're not going to ask you for numerical aspects in the case of companies. Now, when it comes to ROR is the only relief available for companies. Now, proceeds minus cost gives you index gain. Unindexed gain, minus your IA gives you index gain. Index gain minus ROR gives you chargeable gain. So it is after the index gain that you do all those ROR and all those. So indexed gain less ROR gives you chargeable gain. Okay, it gives you your chargeable gain. All right, that's how you calculate chargeable gain when there is an ROR for companies.